Hello everyone, today we are going to talk about MFRS 8 operating segment. What is operating segment? Operating segment is component of an entity from which it may earn revenues and incur expenses. An entity whose operating results are overviewed by the CODM, and an entity for which discrete financial information is available. Next, we are going to talk about non-operating segments. There are two non-operating segments. First of all is Research and Development Department. Second is Head Office. These two is non-operating segment unless they undertakes business activities such as treasury functions by the head office and earns interest.
Question 2. Explain briefly the example PETRONAS. In PETRONAS, the CODM function is performed by the PETRONAS Executive Leadership Team. This team is responsible for reviewing the performance of reportable segment and making resources allocation decision. The CEO of PETRONAS, who is also managing director, and is assisted by senior management in managing the business division and implementing strategies. The second example is FGV. For FGV, the CODM function is carried out by the Group Management Committee. This committee reviews the operating segment performance and allocate resources accordingly. The committee acts collectively as the CODM, overseeing the business segment and ensuring decisions align with the group strategic objective.
Let's take a quick look at PETRONAS operation performance in 2024. Upstream revenue reached 140 billion ringgit Malaysia with a net profit of 34.9 billion ringgit Malaysia, driven by higher gas production despite lower oil prices. The gas and maritime recorded 131 billion ringgit Malaysia in revenue with 19.9 billion in profit, supported by stronger LNG sales and higher gas demand. Downstream faced challenges, posting 154 billion ringgit Malaysia in revenue but recorded a loss of 0.7 billion ringgit Malaysia, mainly due to weaker refining margins and discontinued operation in Africa. Corporates and underbooked in 14 billion ringgit Malaysia with a net loss of 0.8 billion ringgit Malaysia, impacted by asset impairment and forex loss. Overall, PETRONAS core operation remained solid, with upstream and gas and maritime leading the way, while downstream undergoes this. Let's look at the segment performance of FGV Holding Berhad for the financial year ended 31 December 2023. FGV recorded a total revenue of 19.36 billion ringgit Malaysia with a net profit after tax of 112 million ringgit Malaysia. The plantation segment was the key contribution, generating 50.75 billion ringgit in revenue and 292 million ringgit Malaysia in profit before tax. This segment includes activities such as palm oil production, biodiesel and agrochemicals. The sugar sector, however, posted a loss of 23 million ringgit despite bringing in 3.1 billion ringgit in revenue, mainly due to rising production and input costs. Meanwhile, the logistics and support segment performed well with a profit of 148 million ringgit Malaysia from 479 million ringgit Malaysia in revenue, driven by transportation and booking services. FGV also invested over 1 billion in capital expenditure, focusing heavily on plantation development. Overall, FGV's core plantation operation remains strong, while other segments present room for turnaround and growth.
Benefit 1. FGV Holding. Enhanced transparency and performance evaluation. Segmental reporting provides a clear breakdown of a company's financial result by business unit or division, enabling users to see which segment are driving growth or facing challenge. For example, FGV Holding Berhad report its performance across segments such as plantation, oil and fats, sugar and logistics. In financial year 2024, the plantation division was the main growth driver, while the sugar division also contributes significantly. This transparency allows investors, analysts and stakeholders to evaluate the profitability, risk and trend of each segment rather than relying on aggregate group result. Benefit 2. PETRONAS. Better informed decision making and resource allocation. Segmented information help management and external users make strategic decisions such as where to allocate capital, pursue growth or implement cost control. PETRONAS, for instance, disclose results for its major business segments such as upstream, gas and downstream, allowing stakeholders to assess which areas are most profitable or exposed to market risk. In financial year 2023, PETRONAS report revenue of RM343.6 billion, showing the impact of lower oil price and volume on specific division. This level of detail supports more effective forecasting and investment analysis. MFRS 134 Interim Financial Reporting. MFRS 134 Interim Financial Reporting is a financial reporting standard that prescribes the minimum content required for an interim financial report and outline the principle for recognition and measurement in such report. An interim period refers to any financial reporting period shorter than a full financial year, such as a quarter or half year. Component required. The standard allows entity to publish either a complete set of financial statements as per MFRS 101 or a condensed set of financial statements for the interim period. The minimum component required in an interim financial report under MFRS 134 include a condensed statement of financial position, a condensed statement of profit or loss and other comprehensive income, a condensed statement of change in equity, a condensed statement of cash flow, and selected explanatory note information. MFRS 134 aim to provide timely and relevant interim financial information to investor, creditor, and other stakeholders, enhancing the ability to evaluate an entity's financial position, performance, and cash flow on a continual basis. The standard also require that the same accounting policies used in the annual financial statement be applied in interim report, except for change that will reflect in the next annual financial statement. MFRS 134 ensure that interim financial report contain such sufficient information to help user make informed decision while maintaining consistency and comparability with annual financial statement.
First, issuance or redemption of debt or equity securities. If the entity issue new shares, debentures, or other equity debt instrument, or redeem existing ones, it can significantly impact both the financial position in change in equity or liabilities and performance is change in finance cost or share capital. Second, declaration of dividend. If the entity declares or pay dividend during the interim period, it directly affects retained earnings and the overall equity of the entity. This is important for users to assess the distribution of profit and change in equities in the last annual report.
FGV is a leading Malaysian agribusiness. Interim reports are financial statements prepared for periods shorter than a full year, such as quarterly reports. These interim reports help investors and stakeholders track the company's financial performance regularly and make timely decisions. FGV's financial year ends on the 31st of December each year. Following Bursa Malaysia and MFRS 134 requirements, FGV prepares its financial reports quarterly. This means they publish interim financial statement every 3 months to provide updates on their financial position and results. This table shows the specific periods FGV use in their interim financial reports. For the statement of financial position, the current period is the quarter end date. For example, 30th September 2024 with a comparative figure from the previous year end, 31st December 2023. For the profit or loss and other comprehensive income statements, they report both the current quarter period, July to September 2024, and the year-to-date period from January to September 2024. These are compared to the same periods in the prior year. Similarly, the statements of changes in equity and cash flows report year-to-date figures alongside comparative prior year periods. Presenting these periods provides stakeholders with a clear picture of both current and cumulative performance.
Next, PETRONAS is a company that operates across the entire oil and gas value chain. Interim reporting is the process of preparing and presenting financial statement for period shorter than a full financial year. For PETRONAS, the period for prepare the financial statement is usually half yearly.
In this session, the table shows the reporting period for PETRONAS interim financial statement. First, the statement of financial position compares the financial position at 31st December 2024 to 31st December 2023. Next, for profit or loss and other comprehensive income, the second half covers 1st July to 31st December 2024 compared to the same period in 2023. Then, for year-to-date profit or loss is shown the full year from 1st January to 31st December for both 2024 and 2023. Lastly, the changes in equity and cash flow also follow the same full year format. This ratio ensures consistency in financial reporting and allows stakeholders to track and compare performance trend effectively.